Mr. Goncalves, welcome back to the show.
Thank you so much for having me, Jim. It's always a pleasure being here with you.
Well, I have to tell you, I think what people, when they make these judgments, can own a steelmaker going into whatever we have, they don't seem to understand the adversity that you have had multiple times since you started here, including markets that were far worse than this. I think if you give people a little background of what you've already accomplished, which is near miracle, they'll understand why it's a mistake to sell your stock.
Yeah, you put our numbers in any company in another sector, and everybody would give a lot of credit and would appreciate a lot more. We closed 2019 with $2 billion in revenues. And last year, 2022, 20.4. That's 10 times, not 10%, 10 times. 6 months this year, we're already on track for 24. That's another 20%. So that's growth. So it's not old economy. This is growth, real, consistent growth.
So what do we do here? I mean, 3 times earnings, got huge free cash flow. I think paying down debt is very smart. But what would happen if you did? I know you discussed the dividend issue, buyback issue, but it seems so far that it isn't working what you're doing in terms of trying to convince the analysts and the institutions of what a great value this is. Is it just worth riding it out and keep paying back the debt and not worrying about the common stock price?
Well, I worry about the stock price a lot.
Okay.
I just can't manage the company for the stock price.
Right.
The stock price, I don't fight the tape.
Really good point.
I don't fight the tape. I take advantage of what the market gives to me. Keep in mind, if the stock market would give credit to the predecessor companies, I would not be able to buy as much as I did,
right.
More than $80 billion of worth of assets.
That's a very good point.
Less than $7 billion.
You're taking advantage of it in another way. Instead of necessarily, you're buying stocks that are cheaper even than your own stock.
And
then making the companies better. Now, one of the things you're making the companies better is that people don't seem to realize the auto market has been depressed for a while. If anything, other than financing issues, it can come back. And even if it's just EVs, that's also your sweet spot.
It's not EVs, it's a reality that we need to acknowledge. Even if you don't believe it, it's coming. So we are not just the largest supplier of steel for the automotive industry. I'm the largest supplier of steel for each one of the individual car manufacturers. Think a name, I'm the biggest supplier. And these folks are past recession because they created for themselves a self-inflicted wound that now is healing.
Right.
So we are going, recession or no recession, we are going up with the automotive industry.
I think it's very interesting. You correctly, I think, point out that construction's had its day. Construction's slowing down.
Yes.
Autos have not yet had their day because of semiconductor problems that were none of their doing. They're going to have their day, and the pent-up consumer's going to buy cars, and you're the winner.
It's coming. Talk to Mary Barra. Talk to Jim Farley.
Exactly. I talked to both of them in the last 10 days.
I do too.
They're going totally.
Do you know why I talk to them? Because they're my biggest. I am their biggest supplier.
Right.
And Stellantis, and Toyota, and Honda, and you keep naming.
Right.
All these guys, they depend on Cleveland-Cliffs. So we will continue to work together.
Okay. Now I need you to help me. We have a lot of younger viewers, and we have a lot of individual investors. When we talk about giant-sized cash flow, what analogy can we use for them to realize how liquid your company really is?
Let's use the numbers. Okay. Last quarter, we made $1.1 billion in EBITDA, $6 billion in revenues, $1.1 billion in EBITDA, $700 million in free cash flow. That's a lot of cash flow out of the earnings of the company. So that's what we do. We're a money-making machine, and we will continue to put the money to work on behalf of the shareholders and bondholders.
Okay, so in 1988, I was long Bethlehem Steel, and it was very interesting. They made a fortune. They made $679 million. In 1992, they lost $43 million. But nothing really happened other than a brief, shallow recession. People fear that that's you. But
nope.
You're very different from Bethlehem Steel.
Completely different. Because at the time, the industry in the United States was so fragmented. Right. With each one of, that's actually a great point, Jim. Each one of these steel companies at the time were trying to do exactly the same thing as the next door company.
Absolutely.
Now we have Nucor, a company that you know well,
right,
and
sure.
a great company, fantastic company.
You speak highly.
They are in the construction and a little bit in automotive. And you have Cleveland-Cliffs, a lot in automotive, a little bit in construction. So we don't have a lot of.
You were so right. Bethlehem Steel was going head-to-head with AK, and they're going head-to-head with Sharon, head-to-head with letter X, with everybody.
Look, I don't even need to go too far away. AK was going against ArcelorMittal USA about both.
Right. So tariffs, we have to worry. Is the United States protecting your company enough?
I don't think they're protecting my company.
Okay.
I think the United States is protecting the American worker.
Okay.
Because what these folks outside of the United States do, they dump steel here. And then when they dump, they are basically exporting their employment and creating unemployment here. So we are beyond that. We don't need protection. We are a very strong company.
Okay, which brings me to the last thing I want to mention. I need to know, big labor negotiations coming up. To me, it seems unlike those old days of the 80s where labor hated Bethlehem Steel. They hated those companies. It seems like you have some Pacamentaris. You've got something going on that makes it look like that the unions and you agree that there could be something good here.
We do not only agree. We are pulling in the same direction. We understand that the union and the company together, they are a lot stronger than two. It's not 1 + 1 2. It's 1 + 1 5. So we work together for the same objectives. We treat workers as a very important part of the picture, not just as a speech. We do that every day. And that's what investors need to start to realize. And that's the differentiation. And thanks for the opportunity for being here.
Absolutely.
And continue to educate investors about Cleveland-Cliffs.
You tell it straight. You always have. You've had to deal with sometimes these analysts. They run, but they can't hide.
Yep.
But
yeah, nobody can.
No.
Because you can't deny numbers. You can't deny reality.
No, you can't. That's Lorenzo Goncalves, Chairman and CEO of Cleveland-Cliffs, CLF. If you can see through tougher times, this thing was in the 30s not that long ago. It can go back. Man, Bunny's back after the break.